Welcome back to the channel of Truth, Trust and Transparency. Today I'm taking a look at units versus free established houses and the pros and cons of each, what makes for a better investment. Now, it's important to note that there's going to be, especially with units and houses, there's markets within markets within markets within markets. So some of these pros and cons will be a sort of generalization into the stereotypical type of dwelling and how that performs and functions. There's obviously going to be outliers, and I'm sure there's going to be someone out there on YouTube that can find a suburb where, you know, this is different to what you said in the video. However, we need to take a holistic approach. We need to take an Australia-wide approach when it comes to investing. I'll have to admit, I have worked in property development and in architecture, designing, building, developing hundreds and hundreds of units in my corporate career. So I know the unit game inside and out. I am also a property investor that does have a bias to pre-existing established houses. So before getting into the video, I think it's fair and honest and transparent to say and give you guys that sort of information. Obviously, I'm always going to give a preference and put a preference on established houses on, you know, on a very decent block size compared to maybe the new chopped up housing and housing estatements that we're seeing now at, you know, 275 square meter blocks in comparison to units. But I'll try to keep this one as on the fence as always. I might drift over to that side, but at least I'm going to say it up front and be honest with you guys. Just some things to think about. Not financial advice, as always in my videos, but I just want to give you guys that educational piece to get you guys thinking, to answer some of your questions, so that when it comes up to this decision, you're going to be equipped with videos like mine to be able to come up with the answer. Now, let's talk about pros and cons. The first pro for units is going to be entry price, which means the first con of houses is going to be entry price. Now, obviously, if you go to any capital city in Australia, any CBD, there are going to be units that are extremely cheap that you can buy within that CBD for a fraction of the price of a house that's anywhere nearby. So if entry price is important to you, units offer the opportunity to get in quicker because they're at a lower rate. With that being said though, entry price isn't everything. And as we sort of unpack the rest of these, you're going to find out exactly why. Entry price for a unit, now for example, you know, you might be Melbourne CBD where you can get a unit that's X sort of student accommodation for $300,000 or $400,000, and that the closest house to that CBD might be worth a couple of $1 million. So that's an example of how entry price is a pro for units. And typically for a house, you've got to pay more money to get into, higher deposit, which means entry price would be a con. Now, because that entry price is lower, it means higher it means you have a higher gross yield compared to a house, which will almost always have a lower gross yield. Think of it this way. If I'm paying less to get in and paying a similar price for a 2-3 bedroom apartment as I am a house, then obviously it is going to give me a higher gross yield. However, my friends, I want you to take into account this word here. And the way I always think about it, this is the way I've remembered gross versus net. Gross, when you look at it, gross, that sort of definition of the word is, oh, that's gross, I don't want to look at it. That's how I think of gross, because I don't want to look at it yet because it isn't the final number. Net, think of it as a net. It catches what is remaining. So your net figure is what you need to worry about. Now, although units do have a higher gross yield, what is the first con of a unit? It's going to be, a con is the net yield. Net yield. A pro is the net yield. And why is that going to be a difference? Well, my friends, the reason that net yield is a better pro and it is a con for units is because it has a con, more upfront plus ongoing costs body corp. Now, in case you are new to this and you don't really understand how the body corporate stuff works in a unit block, essentially once you have a strata titled property, you have a body corporate, which is essentially a governing body that is meant to look after that building. If you're in a building of say 100 units, what the body corp does is collect money on behalf of all the owners to make sure they have enough money to pay the bills of that unit. And they also have what's called a capital works fund and a sinking fund for when that building needs to be renovated, for when the lift needs to be replaced. And they will take on a quarterly basis a agreed fee that can increase or decrease, but usually 2-3 bedroom apartment, it can be anywhere between $1,500 to $3,000 per quarter. Now, you're thinking, a lot of people say, oh yeah, but the unit's got like a 7% yield. It's cool. Now that's cool and great, but once you account for these body corp costs, it's almost always that the net yield is a lot lower in units because you have to pay, in that sort of instance, $1,500 a quarter, $6,000 a year. If it's $3,000 a quarter, it's $12,000 a year. So as you can see, that can quite easily impact the cash flow and operating costs, leaving you with a lower net yield. And there's more of those ongoing costs. You got to pay that quarterly sometimes, and depending on the age of the unit too, there are such things such as special levies. That's when there is an issue with the building. There is not enough money on the operational. There is not enough money that the body corp has held back from its owners, and therefore they raise a special levy, which could be 50 grand, it could be 100 grand per apartment, where everyone has to chip in and pay that to be able to conduct and finish the works. So for me, big con is there's more upfront and owing costs with the units. And if you don't like it, it's almost like don't like it, leave. There's also, another con is the politics. Now, another con, politics of ownership. Like I said, there's a body corporate, there's going to be a strata committee, there's going to be members on there, there's going to be voting and rights. And I've seen it happen firsthand, for example, where there was a particular building that I needed to speak to the owners corporation. So I needed to sit on that strata corp. I needed to sit in on that meeting. And then when they were doing their voting rights, there was a majority of a certain nationality that all voted one way, and there was a minority of another nationality that was voting another way. And it gets very difficult to be able to have any sort of say, input, ownership over what happens to the building when you are a minority and you are voted out. There's people that allocate their vote to other people to be able to vote on their behalf and all those sorts of stuff. So it's definitely, there's a lot of politics in it, especially depending on where the unit is located, compared to a house where it's just you can make your own, Torrance title house, you can make your own decisions, you're a big boy or big girl. Now the next con is lower capital growth. Con, higher cap growth. Now, I'm not saying that units don't grow. However, if you look at most of the data around capital cities across Australia, the houses in the suburbs that have the units particularly grow at a stronger rate, or houses as an asset class grow at a stronger rate compared to units. So although, and if we relate it back to here, although it's cheaper to get into, you are also signing up for, in most cases, a lower capital growth rate. Now, I know there's going to be suburbs out there where you go, oh, but Dave, these units go quicker. I'm talking, as a majority, as a whole, compared to just that one sort of market that you're referring to. Now, in terms of pros and cons, another thing as well, in terms of property investing, is Sometimes we want to be able to pull the lever for value add opportunities. We want to be able to renovate. We want to be able to redo bathrooms, add bedrooms, granny flats, all those sorts of things. In a unit, there are less opportunities for value add. And that is because it is extremely difficult it is extremely difficult to add a bedroom onto a unit. You might be able to, carve out part of the existing floor plate if it's a particularly older unit. However, there's less opportunities for you to add value. Any major works that you need to do within your unit as well need to be put to old mate, politics of ownership, body corporate. You need to get permission. There's all those sorts of things and issues around opportunities for any value add. So you can't add essentially anything on the exterior of the building. It's all going to be internal. Whereas a house pro is a value add. A house has a huge amount of value add opportunities. So house you can do, if it's a freestanding house on its own block, there is so many opportunities for subdivision, granny flat, additional dwelling, additional story, anything you can do inside a unit, you can do also inside a house. So therefore, I feel like a house has more opportunities for you to get in quickly and do any of those value add propositions. Now, the next con, and I'm not trying to be one-sided or anything, is going to be land value. Now, what do I mean by this? Obviously, as we know as property investors, the part of a property that appreciates is the land that it is built on, and then obviously the building or the dwelling is the depreciating asset. Now, when you have a unit and you have, let's just say, a block of land, if you have 100 units, if you're in a block of 100 units and the land's worth $5 million, $5 million, and there's 100 units in the block, well, you own 1/100th of 5 million, so you technically own a $50,000 times it by 10, a $50,000 bit of land, compared to when you own a house, your land value, if it's a $750,000 house, the land value might be $450,000 or $500,000. So obviously then, if I'm buying a house, I'm buying a larger portion of land that is appreciating in value compared to the unit, because the unit is obviously such a smaller figure. And trust me when I say this, even in the more expensive suburbs, once you cut it down to how many units are there, it often doesn't compare in terms of the land component. Now, the pros is location. Con is going to be location. Now, whether or not it's a con on the house side, I'll leave it up to you guys. But the pro in the units is the location. You can have units that are located near, central business districts, CBDs, near main town centers. Some of them have shops underneath. You have those access to location/amenities. Most of the time, the units are going to be well located. Why? Because the density is formed around our city centers. You're obviously not going to get a block of units that are 10 stories high in the middle of a regional town. You also have amenities. So that is location to amenities and also amenities within the building. So nowadays, what we're seeing in the last sort of 5 years is this gentrification of developers getting a little bit smarter around what they're developing, what they're building in units. They're putting in all sorts of pools, gyms, wellness centers, libraries, wine tasting, all those sorts of things to have those amenities on hand for the people that live in units. So that's more of a livability factor. And you're also going to be located quite close to a CBD or a city center. Houses, obviously, because of the zoning and how cities are designed, we're not going to get 1 and 2 story houses in the middle of a CBD. So houses are going to be located further out, and there is a really good chance that the amenities are located a drive away from that house rather than it be within walking distance. Now, there's still easy instances where, regional markets and stuff like that, where you can walk to those local town centres. However, the places that have units are going to be better located. The units might be, a block back, and the houses might be a couple of houses back from that. So units do have better location and amenities. Now, I'll put this in pros, but just know that I'm doing so begrudgingly. Is depreciation. One of the best things that Mike Mortlock told me was that depreciation, if you were to buy based on depreciation, you would buy a brand new apartment because they have the best depreciation benefits compared to houses which have a lot less. That's why we get all these people that are branded as investment advisors that sell off the plan units, and they market this as a benefit, when really the way you should be thinking about depreciation is more so a nice to have compared to something that you should buy dependent on. So I always think of depreciation when I'm going for a deal. The depreciation is not there. If I end up being able to have depreciation, it's an added benefit on top. However, I'm not buying because of depreciation. We know the best depreciating assets are going to be brand new off the plan apartments, but that does not make them a good investment decision. It still is a pro technically, so I'll put it in there and give you your time of day, or your property spruikers that are watching my content, but I don't think it's the main reason that you should be buying. Now, the next one I'm going to put there as a con for apartments and a pro for houses is going to be the supply. Why? Because of the land scarcity in Australia. We know that the suburbs have been built out around what they already are, and it is so much easier to be able to supply and build up more units. Like we've just seen at the moment in Wallara, for example, where the government has said, yeah, we're going to put 1,000 new homes. Now that might be over 4 or 5 unit sites that have 250 units. It's a lot easier for one developer to come in on one site and build 250 units than it is for a developer to come out to find an area that they can build 200 homes in. Then they need to do lands, then they need to do earthworks, then they need to do new roads, then they need to do all their benching, retaining walls and all that kind of stuff, then build all the houses. So for me, supply is a con and a bigger risk in apartments because of the smaller side that you need and the ease it is. A developer can come through and build. We were doing hundreds, 200s, 300 unit developments for a couple of hundred apartments, and we're knocking them out in 12, 18 months. Whereas you are never, ever, ever going to be able to supply that many houses that quick. It takes a lot longer for supply to be able to catch up and move into the markets. That's why a lot of people are, have an issue with building approvals. In my opinion, building approvals for apartments is a lot more riskier and danger compared to house and land packages, just because of the time it takes for them to get into the market. The same 250 or 150 apartments, it could take 3, 4, 5 years to be able to deliver them all out. Now, my question to you would be, just because we've got the building approvals doesn't mean it's a bad thing, because 5 years worth of demand growth and people wanting to get into that suburb, you might find there is a decent take-up of that stock coming onto the market compared to the supply here, where there might be 3 or 4 developers building at the same time. Then all of a sudden, there's 1,000 units online. Look at Parramatta CBD. There could be 500, 600 units for sale online, and then we have this massive saturation and oversupply, which can hurt the price of your asset. So for me, another con is going to be the supply and the scarcity of units compared to houses. They're not making any more land, as the famous saying goes, as much as I hate it. So there is a supply and scarcity factor around well-located land. Would you agree? They're obviously not building any more land around it. You need to go further and further out. Now another con of units is also going to be regulatory requirements. Houses are houses are going to be little to no. Well, what do I mean by that? When you think of an apartment building, for you guys that don't know, recently the Australia's Building Commissioner, they brought in a DBP, Design Practitioners Act, and essentially it was more regulations around constructing apartments, how they are constructed, and how they must be built. Now, there are so many regulatory requirements now for units that, if you're doing any sort of works on an older style building, potentially you need to bring that up to code. So there's things like fire sprinklers, fire alarms, there is lift compliance, there is balustrading compliance, there are all these different requirements, building separations, there is the design of the apartment, the layout of the apartment, there's a whole bunch of different regulatory requirements with a unit that is restrictive, that is more expensive, that is also ongoing. And who's not to say that, the government can bring out and mandate a whole bunch of different requirements for units for developers to be able to put in or mandate across their, current portfolios that can affect you, and I would see as a negative. Think of the cladding disaster, 5 years ago, where the government came out, we changed the laws and requirements around cladding. A whole bunch of unit owners were stuck and left with apartment buildings. With combustible cladding, and it's taking tens, thousands, millions of dollars to be able to rectify that. When you have a house and it's your own block, you have very little to no regulations in what you need to and what you have to do. Apartment building, from the front door to the lift to the smoke alarms to the speakers to the car park, all those sorts of things, there's just a lot more at play that you need to worry and think about. Another con, I would say, and Jesus, I'm not trying to be one-sided, but this is stacking up, is going to be neighbor proximity. Obviously, in a unit, you live with people both sides of you or one side of you, and sometimes above and below you. So that can be seen as a huge con. Noise, I know a lot of people complain about the noise and all that kind of stuff. They say that developers, build extremely cheap and it's noisy. You can hear your neighbors or you can hear your other tenants. If there's anyone out there that is watching this video that is one of those people, just know that is the builder and developer comply with the Australian standards. It's the Australian standards and those bodies that you need to have an issue with, because the developer's not setting the standard in terms of what to construct out of. They're following the building code of Australia. But neighbor proximity, I would say, is also a con for units, because you got people right next door. Whereas obviously with a house, you can be 10, 20, 30, 50 meters away from your neighbor, which is extreme advantage. Now, to probably summarize this stuff up, this video's went for long enough, and I never try to create a video longer than it needs to be. If you've gotten this far and there's some things on there that you haven't previously thought about, I would appreciate it if you can give me a follow and subscribe. Definitely on YouTube, trying to get to 2,500 followers by the end of the year. Don't know if I've called that too early and that I'll get there, but I'll give it a good shot. Now, if I was to summarize units, I would say that they are affordable and conveniently located. If I was to summarize houses, I would say they are growth and control. You have fully control over this asset, whereas here you don't. Where I do see units working, if you were to ask me, is going to be in those more premium suburbs, more expensive suburbs, where the units are the established walk-up blocks of 2-3 stories of units that don't have the lift, all the fancy things that make the overheads go up and through the roof. So think of eastern suburbs, Bondi, Rose Bay, those sorts of areas. I can see those working as a play, but they are also probably going to be, just remember, negatively geared. That's where I would potentially see them working, but If we do look at the two things that I summarize units as, I said affordable and convenience. It would only be convenience because that price level, they wouldn't be affordable. So I think units only works typically in the top end. I see a lot of buyers agents trying to sell, these units for 180 grand that are 11% yield. What I would question you and question them about, and they go, oh, it's great yield, cash flow, blah, blah, blah. Your issue is the unit's been there for 30, 40 years. Why is it still $180,000? That's the real question. There's no capital growth in something like that. So I think you can get easily pulled into the thought that, oh, units are great for cash flow, high yield. Just make sure that you do your net yield after all your costs. Another hack as well that I learned when interviewing a strata expert on everything properties, that you get the strata report done and you can get companies that do them and review them, and they have a look at the sinking fund and the capital works fund and say, for a building this old, this is a typical amount that they have, or for a building that this old, they don't have enough in it. So the strata reports and reviews can actually give you an understanding that if you buy this unit, you might be up for $100,000 special levy or $50,000 special levy. So if I was buying a unit, it would be in those more expensive locations, knowing that is going to be negatively geared, it's going to cost me money, but it's going to have that better growth because it's built out, and there is that scarcity around, like Bondi, for example. There's no more units to be built out at an affordable price range in Bondi, and you have that scarcity, and you have those 2-3 story walk-ups that don't have a lift, that don't have a big pool, that don't have a gym, that don't have all those overheads. Where units I think don't work are obviously going to be those high-end developments, and I've done them that are 100, 200, 300 units big. Now, I know that you can get growth. I know that those assets will increase in value. However, is it the best place to spend $750,000 for one of those units? No, I don't believe so. I think you need to look at either regional or well-located, established houses on those blocks that are, typically bigger than 450 square meters. We say that in our due diligence in the core stuff. Look for sort of those blocks over 450 square meters, just so you get that really good sized block. Established houses, looking at those suburbs where the data is working in our favor in comparison to units. But hopefully that's a good enough summary on the pros and cons of houses versus units. If I've missed out on something, please let me know in the comments. Any thoughts, questions, queries, whatever, drop them in the comments also. And as always, guys, I'll see you tomorrow.